Bank of Canada Governor Mark Carney says the country's private corporations are holding onto too much cash. That cash on corporate balance sheets is unusually high, and he wants those companies either to invest it or give it to shareholders. For his view on this, joining us now on the line from Ottawa, John Manley, President and CEO of the Canadian Council of Chief Executives and the 35th Minister of Finance of Canada. Mr. Manley, it's good to have you on the line there. How are you tonight?
I'm just great. Thank you, Steve.
Terrific. I want to read something that the Globe and Mail published last month just to set up our discussion here, and then we'll go from there. Bank of Canada Governor Mark Carney has taken a rare swing at corporate Canada, accusing companies of sitting on huge piles of dead money that should be invested productively or returned to investors. Mr. Carney acknowledged that companies are wary about the global economy's prospects because of debt problems in Europe, but he said Canadian executives are underestimating the resolve of the central bank and other authorities to guard against a financial crisis. Answering questions after a speech to the Canadian auto workers, Mr. Carney suggested that with hundreds of billions of dollars in their bank accounts, Canadian firms aren't doing enough to drive economic growth and create new jobs. Quote, "The level of caution could be viewed as excessive," he said. Referring to corporate managers, he added, their job is to put money to work, and if they can't think of what to do with it, they should give it back to their shareholders. Let's start there. How do you respond to the accusation that Canadian firms aren't doing enough to drive economic growth and create new jobs?
Well, of course, I have huge respect for Governor Carney, and I think we're all very proud of the job that he does internationally as head of the Bank of Canada. It's interesting, Steve, just within days of his comments at a Canadian auto workers meeting, the GDP numbers came out that showed some modest growth, and credited most of that growth to business investment. So clearly businesses are investing as well as accumulating cash. And I think the accumulation of cash is quite understandable given the threat circumstances that exist in the world. A lot of risk, a lot of worry, and what I felt a little bruised about was the governor's comment that cash that was retained on a balance sheet was dead money. It's a little bit like an insurance policy. If you never need to make a claim, I guess you could look at those premiums as being wasted or dead money. But most of us buy insurance because the day that you need it, you really need it. And I would guess that companies like Research in Motion, that has accumulated a lot of cash, are pretty glad they've got that cash now because they've faced some pretty stiff market headwinds that they've been able to endure, in part because they've got cash on their balance sheets. So corporate managers are there to try to make the decisions to advance the interests of their companies and their shareholders. Let
me follow up with some numbers, these put together by Bloomberg, where they've got Suncor Energy, for example, with $5.2 billion of so-called dead money. Admittedly, you don't like that term, but that's what the governor's calling it. Teck Resources Limited at $3.6 billion, Inmet Mining $2.7 billion, Bombardier with $2.5 billion, and then StatsCan numbers show Canadian non-financial corporations with a cash hoard, so described, of $526 billion at the end of the first quarter of 2012. That's an increase of 43% since the recession ended in 2009. So if you would, amplify in your first answer a bit by telling us why it appears that companies are sitting on so much money at this point.
Well, those that survived the downturn in 2008 remember very well what it was like when credit markets closed up. And I think that's why Governor Carney says they're not putting enough reliance on his assurance that liquidity will continue to be available. Businesses that needed to renew loans during 2008, 2009 often found that there were just no markets to provide them with cash. Any manager that went through that is thinking that it's pretty hard to have too much cash on your balance sheet right now. They look at what's happening in Europe. They hear stories of potentially a hard landing in China, and they see that the United States is facing this debt cliff in a couple of months' time, and they're saying, how can you have too much cash? The world is full of risk.
But is it also your view that these companies, in fact, are investing and are putting the money out there, and that to call it dead money is not fair?
Well, we know they're investing. We know, for example, that business investment in Canada is almost back to the level that it was before the recession. It's just down about 2% since the recession. Profits in the corporate sector are still 20% below where they were at the peak before the recession. So investment has picked up more quickly than profitability has. That's a good sign. As I mentioned, the GDP numbers last week suggest that that business investment is driving growth in GDP. And at the end of the day, business managers also have to look to their shareholders. In fact, if they don't put their cash to use, shareholders do in fact want the money back, either through dividends or share buybacks. And some corporations will need to be looking at that if they think that they'd rather stand pat, not use the money for expansion, but rather return it to the shareholders. That's a legitimate decision. But I think facing the risks that the world throws at them today, looking at the past experience of the last 4 or 5 years, suggests to a lot of CEOs in Canadian businesses that having cash on hand is a good strategy right now.
I note the other day, in fact, that the big banks of this country sent out, I guess, more than $500 million in extra dividend payments. That came not too long after the governor of the Bank of Canada made his critical comments. Do you think there was a connection between those two things?
Yeah, I don't actually think so, because I think usually these decisions to increase dividends are quite a long time in the making, and they come concurrently with the announcement of quarterly earnings, which, you know, you could have picked out those dates a year ago. So I don't think it was prompted by the governor. I think what it is a realization on the part of the banks that they, you know, there's just too much risk out there for them to deploy a lot of that capital in acquisitions. You know, Scotiabank did make a major acquisition last week, but rather that it's time to return it to shareholders. Some of the banks strictly through dividends, some, I believe, through share buybacks as well. And that puts the money back in the hands of the investors whose money it is in the ultimate result in any event.
This was a bit of a tag team operation, if you like, because Governor Carney on one day said what he had to say, and then not very far after that, Jim Flaherty, the finance minister, a job you know about since you used to have it, said it was up to the private sector to get off its butt, so to speak, and get out there and start stimulating the economy, that he's done as much as he can or is prepared to do with his stimulus program. Is that a fair statement, what the finance minister had to say?
Well, first of all, I mean, you're right, having had that job and working closely with the governor of the Bank of Canada, I mean, their concerns are different from the concerns of business leaders. They have a different responsibility. Of course, when you're the finance minister, you want businesses to be creating jobs. But businesses don't actually exist to create jobs. They actually exist in order to make profits on behalf of their shareholders, and that's got to be their principal responsibility. Otherwise, CEOs find themselves out of work. So that's not what they're there for. On the other hand, you know, we do keep nudging Minister Flaherty on some of the things that he could do. Federally regulated businesses, for example, are facing very serious constraints around funding of pension plans. He could do more to alleviate that, and that would actually free up some of that so-called dead cash that doesn't go into further investment in machinery, equipment, or infrastructure. He's taken quite a whack out of large Canadian companies that do research and development in his last budget. So it would be good to align the policy with the results that he wants, particularly when it comes to the large business sector in Canada.
So when a finance minister basically says, come on, corporate Canada, get off your butts and get out there and start creating some jobs, is he in fact spitting into the breeze?
Well, it's good politics. I may have done a little bit of them myself in my time, Steve. Who knows? But the reality is, and for the most part, Minister Flaherty stresses this, creating the right policy environment in which business can make investments is really the principal job of the government. And I think the fact that Canada has seen the results that it has been seeing, I mean, really we lead the world for the most part by most measures, is a result of a very steady and very sensible policy environment that successive federal governments have been creating for Canadian business, and the results are there. I think Minister Flaherty, and indeed anyone, would want to see lower rates of unemployment. But when you compare our rates with everybody else, they're pretty good. More investment would bring that down further. And my sense is that as we come through some of these risky scenarios that are still unfolding both in Europe and Asia and the United States, that we'll begin to see that investment pick up even more.
Let me just follow up in our last minute with something you said a moment ago. You know, of course, Carney and Flaherty are trying very hard to get corporate Canada to spend more money to create more jobs. And you said that's basically not corporate Canada's job. Their job is to maximize return for their shareholders. Do you think, I mean, does that sound a little harsh given what Canadians have gone through over the last 4 years in terms of the economy? I mean, do you suspect that Canadians really do think that their big companies in particular have a job, which is to help create more jobs?
Well, that may be one way to try to express it, but you know, CEOs and their boards of directors face a democratic process as well. Mr. Flaherty has to face elections every few years where he goes to see the voters who at their doorsteps. Well, owners of companies also have democratic rights. And we have experience in this country where corporate managers and their boards of directors might say, yes, but we've created jobs, and the shareholders say, you may have created some jobs, but our returns are lagging what they should be, and we're going to make a change. So, you know, the system works well when everybody's trying to do what their job is. And if policymakers get the right policy framework, then that's going to enable business owners and managers to make the investments that will create jobs. But if you get one another's roles mixed up, you're probably going to head for a problem. Understood. Mr. Manley, it's good of you to appear with us on TVO tonight. Thanks so much. My pleasure. Thank you, Steve. John Manley, President, CEO, Canadian Council of Chief Executives. And we now bring you two more voices on this subject. Mike Moffatt is a professor of business, economics, and public policy at the Richard Ivey School of Business at Western University in London, Ontario. And Armine Yalnizyan is a senior economist with the Canadian Centre for Policy Alternatives. And Armine, we welcome you back. And Mike, nice to have you in that chair for the first time. Thank you for having me. I think the first thing we ought to do here is just get your feedback on what you heard from John Manley. So, Armine, why don't you go first? What did you want to pick on?
Well, I thought it was really interesting that he said that businesses' job is not to create jobs. We've heard that all the time. But then we've had a run on getting federal policy right by cutting corporate taxes so businesses can create jobs. So corporate taxes have dropped from 29% to 15%, and they're sitting on this ever-growing cash hoard, and we're told that that's good for business. Why did we cut taxes? Why don't we just take a little bit of that money back and put it back to work in the things that Canadians will be paying more for in 5 to 10 years because of higher labor costs and higher costs of borrowing money, like infrastructure? I'm not getting this.
Mike?
I am getting it, in fact. I agree with Mr. Manley's statements. In particular, investment's gone up about 7, 8, 9% per year, or just quarter by quarter. So we are seeing this. Yes, they are hoarding cash, but what corporations are doing are their debt financing, simply because interest rates are so low, you might as well hang on to the cash. If somebody's going to give you $1 million, $5 million, $10 million at 1.5% interest, why not take it, hold the cash, and invest using debt?
But could you respond to her point, which is there's an implicit deal that when you get tax cuts, the likes of which business have had over the last 10 years or so, part of the obligation is to hire people with that excess money.
I think there is. So I do agree with that. I think they are, though. Again, investments going up 9% each quarter. But as well, that investment in those jobs have to be sustainable. There's no point going out, throwing a bunch of money, creating a bunch of jobs, creating a new plant, whatever, and then being out of business 6 months. So we have to go slow and steady. And I know that's frustrating when you're 22 years old, you're out of university, you have a degree, $50,000 in student debt, and can't find a job. I would be quite upset with that too. But we have to take this slow and steady, the sort of Canadian way.
You can't force them to spend money if they don't think there's any demand out there, can you?
No, exactly. And in fact, if Mr. Manley keeps saying that phrase, Government's job is to get the policy climate right. Let's take a look at what it takes for businesses to be ready to invest. Number one, there has to be enough demand out there. Around the world, we now have 200 million unemployed people, and China is slowing down. Where's the demand going to come from? Used to be that Canadian companies could turn their back on the middle class in Canada because the real market was in emerging countries where purchasing power was growing. So let's say it doesn't matter how many jobs they create here in Canada. They've got no place to sell. Around the world, every nation is doing this. They're taking part in austerity, which means governments spend less. Businesses aren't spending because there's no demand out there, and households are losing jobs and they're deleveraging. They're trying to get their debt under control.
Dead economy.
It's not dead. It's not only dead money. It's dead economy. Where's that next pump up going to come from? And my point is, if nobody knows what to do with the money, let's say we take Mr. Carney's advice and give it back to the shareholders. Where's the investor going to put that money? All the companies are in the same bind. So why don't we take a little piece of that money back and actually start doing the things that we need to do for communities, for households, for businesses, so that we can avoid costs to taxpayers down the road that are avoidable?
I think there's nothing wrong with that. The problem is demand in Canada is quite strong, not as where as it could be. I think both the federal government and the Bank of Canada could be doing more. But our two biggest problems are China and Europe. There's simply not enough demand there. So I'm not sure what we're supposed to do about that. You know, maybe we should spend the money to lobby Obama and lobby Ben Bernanke to do more. But you know, most of Canada's problems, unfortunately, are out of Canada's hands.
No, listen, I really think that kind of puts things into this impossibility syndrome where you can do nothing. In fact, you can do something. Because Canadians and businesses, most businesses in Canada, there's 3 million of them, most of them are not multinationals. Most of them rely on the local economy. We have roads that are in huge disrepair. We're going to have people retiring in droves. We're going to need men and women working. Who's going to take care of the kids? We're going to need child care.
The finance minister would say, we just spent billions upon billions of dollars on stimulus spending in order to, I think, what do you call it, the Economic Action Plan?
Yeah.
In order to get to do exactly what you just said.
Look at the climate we are now in. We are still facing global and inadequate demand. So, you know, at some point you lose trust in capitalism and democracy if all you're doing is creating the proper policy environment for businesses to invest, and they keep adding money to their balance sheets, but they never invest, and it's rational for them not to invest. Like, at what stage is that, like, what's the economy for?
Go ahead, Mike. What's the economy for?
Well, again, I don't think we're doing quite that badly. I mean, yes, unemployment's at about 7.5%, but we're not Spain. We're not at the Great Depression. We're not at 20-30%. You know, you could make an argument that yes, maybe we should have done more of this stimulus spending. And I have to thank Minister Flaherty because some of that spending money went to Ivy's new building. I have a brand new office.
That stimulus you approved of.
I approved of that stimulus. It's a lovely building.
Unenlightened self-interest.
You know. It worked for us, at least in that case. But yeah, there is a bit more we could be doing, I suppose. And again, that's kind of a separate issue from the corporate tax issue, because if Flaherty wanted to, he could just run a bigger debt. I mean,
why would you? Why don't we just take some of that dead money and put it to work? Make it live money. Actually do the things that we need to do to, for example, retrofit government buildings all over the country, reduce the costs of energy, actually make it cheaper for us as we go down the road.
Well, what about this, Armine? You know, one of the things that John Manley said, and has been on the table for discussion, and the big banks did it just a week or two ago, put the dividends out there.
But I said that. So you give the money back to investors.
Oh, in that respect, okay.
And they're going to put it where? Into another corporation that doesn't know where to put the money, which is quite rational, because why would I invest in expanding my plant when nobody's buying anything?
So that's not going to get it done, you think?
No, in fact, what will happen is you give it back to the, you know, governments said to us in 15 years of tax cuts, you know what to do with your money better than us. Let's give you back your money. So we've deferred infrastructure investments and all sorts of other things that we should have been doing. And now businesses are saying, we don't know what to do with the money. Let's give it back to you. You decide what to do with the money. In fact, there are things we need to do to save our costs down the road. I'm going to say this one more time. In 5 to 10 years, the cost of labor is going to go up and the cost of borrowing money is going to go up. We're going to be sticking ourselves with a bill that we don't need to be paying more money from. As a businessman, you should be saying this is a crazy way of using our money. We should actually be investing now to actually get the benefit of it now, but also Yeah, and we've got fallow labor.
Okay, Mike?
Yeah, and that's what businesses are doing. Again, investment's going up 7, 8, 9% per year. Consumer spending is not going up 8, 9% a year. Government spending is not going up. If governments and consumers were increasing their spending at the rate of corporations, we wouldn't have this problem.
But is she right that when companies give money back in the terms of, increased dividends for shareholders, that those shareholders tend not to do anything with it, and it doesn't add to the economic activity
not in
we're
this
hoping
environment.
for?
I'm not saying they don't tend to. They would tend to, but not in this environment.
Is that accurate?
I think you could make that argument because most of those people who own those shares are disproportionately wealthier, so they're more likely to save it than somebody in the middle or lower class.
So she's right, it doesn't help.
It doesn't hurt. Let's put it. It may not be.
How does it not hurt if you're just shifting around the decks on the chairs on the deck and the ship's going down because nobody's doing anything to right it? But it can be righted. Now you just said governments aren't spending more, households aren't spending more, but that's exactly what people like you have been saying: is governments should pull back now. Now's the time for governments to pull back. And of course, we know household debt means that households should be pulling back. So those two parties in the economy are doing exactly. They're playing by the rules that people like you set, and then you're saying, well, then we have to rely on business investment. Yeah, that was the game plan, but business investment has been increasing in the last few quarters, it's true, but they've been adding more to their bottom line. Every quarter, last quarter, they added $23 billion in excess profits, they had more money than they started off with at the beginning. And this is on an aggregate level. You know better than most people that it's the biggest businesses that are at the distribution of how those savings are.
You want to respond to that?
Well, I don't recall ever saying that government shouldn't be spending. I mean, if there's a business case to be made, like if you want to build a new road and that road is going to increase GDP, increase wealth, then go ahead and build the road. There's nothing wrong with that. But again, I think we need to get this away from this idea that corporations aren't spending, because they clearly are. So the cash story is a bit different. That it seems that people have this idea that businesses go into a contractor's office with a briefcase full of dollar bills and say, "Here, build me something." But corporations have many different ways that they can finance projects, whether it be through debt, through selling shares, and they're using those methods instead of using cash. But that doesn't stop governments, if they choose to invest more in these things. They don't have to take that money through higher corporate taxes. There's a whole range of options.
Let me come full circle here, though, and sort of go back to where we started in our last couple of minutes here, which is, do you, Mike, see an obligation on business to create jobs?
If those jobs are sustainable. So it comes back to sustainability. I don't think any of us should act in a manner that's unsustainable, whether that be environmentally unsustainable or economically unsustainable. If just hiring a bunch of people, buying a bunch of equipment, and being out of business 6 months helps nobody.
Okay, Armine, let me put the opposite side to you. It is clearly the mandate of the Governor of the Bank of Canada and the Minister of Finance to create jobs. Is it clearly the mandate of business to do that?
Absolutely not. And they've been saying right
so you guys
from
agree on that?
From the beginning,
okay.
Anybody that studies economics knows what Mr. Manley said. The job of a corporation is to maximize profits, right, for whoever it is that owns the corporation. So the job of, he dismissed the idea that this was good politics, talking about corporations needing to create jobs, but that is the definition of small p politics, is what is the economy for, and is it being managed so that we don't socialize losses, privatize gains, and the only players that win are the big boys, because that destroys our faith in what the economy is for. I just want to say I'm glad that we agree that it isn't just businesses that create economic well-being. So if we need a road, this isn't about stimulus. This is about creating the platform for future economic growth. So what we need to understand is both corporations and governments create the right foundations for economic growth. And I think there's this fight between who should be doing it that doesn't need to exist. Now's the time for the government to be doing some of the things that we all need.
You're nudging awfully close to saying, you didn't build that. If you know what I mean. Now, you did build that, though, right?
Oh, yes, my office at Ivy. I was up there with a hammer and level.
Okay. Armine Yalnizyan from the Center for Policy Alternatives, Mike Moffatt from the Richard Ivey School of Business at Western University with its brand spanking new building. Thanks, everybody.
Thank you.
Support Ontario's public television. Donate at tvo.org.